very much for coming. Can I introduce Aidan from Quantum NRG? Aidan spoke the other night, and he is consulting to some local businesses and farms for solutions here to set up virtual energy networks. And Justin McFarlane is here from ReThink Sustainability. So over to you, Aidan, to introduce yourself and Justin. Thank you.
Okay, well, I'm going to keep things nice and short and sweet because what we want to do is make the demonstration the focus of the session today. But effectively, our company, Quantum NRG, are energy problem solvers for small to medium businesses, and adding the word communities. Hopefully, if we can get this project up and running. But we do that by spending a lot of time up front understanding our clients' requirements and then bringing the right expertise to walk them through the journey. So in a nutshell, that's what we do on a day-to-day basis. We're really, really excited about this initiative, and we thank the directors at WinZero for giving us the opportunity to put this on the table. We said at the presentation last Thursday week, the next step was to get a demonstration, and Justin's going to take us through that. And Justin really doesn't need any introduction in the sense that they are the architects of this solution. And there's multiple groups out there using this solution. It's been proven both by a pilot group of agricultural businesses that we've put together, and they've been running it for 18 months through one of the retailers. But Justin's got a much bigger picture view of this. He'll give you some insight to the solution today, but I think he's also going to give you some clues as to where the solution is going for the future as well. And with that, I'd like to pass you across to Justin McFarlane.
Thank you, Aidan, and thank you everybody for having me along today to share a little bit with you. Just as a very brief bit of background, ReThink Sustainability is an international sustainability advisory that I co-founded about 7 years ago. And we look at sustainability through about 36 different touch points or lenses. One of those is energy. And we do, working with people like Aidan and others, quite a lot of very diverse work in the energy sector. And one of the things that we've been able to develop over the last 6 years is this virtual energy network concept. And we're now very fortunate to actually have it live in the market to be able to introduce to people to come along and experience if they wish, and to have the capability to hyper-utilise any generation assets that they might have in their portfolio or at their home, as well as any dispatchable stored assets that might be available within the portfolio. And with that, I might just jump into running through the virtual energy network. I'll do this a little bit briefer than I might normally, just with the time that we have today, to make sure we've got some time at the end for some meaningful discussion as well. So the virtual energy network was actually developed to enable the real-time sharing of any excess energy, completely agnostic as to what the generation source might be. And obviously for today, we'll focus a little bit more on solar as a generation source, but the VEN can work with any generation source in the marketplace. And as I mentioned, that's for real-time energy sharing. So if somebody's home was generating excess energy in this 5-minute bracket in which the market's monitoring and tracking that energy flow to and from that property, we enable, through the virtual energy network, that generation site to share that excess energy with anyone else within our virtual energy network around the country at a rate that the generator and the off-taker agree, not what might be typically dictated through the retail contract for a feed-in tariff. And in some cases, there's the opportunity to look at other advantageous financial benefits for virtual energy network participants. And I'll touch on some of those as we run through this as well. I noted, just listening in earlier, that there's someone from the council here today. So I will try to cover off a range of the different participants that we have in the market that have been working now with live virtual energy network, energy sharing and trading, coming up to 3 years that we've been operating this in the Australian market. And I'll use a couple of council examples just to talk through and show some of the capability. But When we're looking at these user interfaces I'm about to share, which are the same user interface that any participant in the virtual energy network will have access to, everywhere we have one of these upside down blue teardrops is an individual metered site with their own bill. So there's a national meter identifier there, or a NIMI, that's recording all of the energy consumption for that site. And that's where the retailer would actually apply their information to bill the market participant for how much energy they've consumed. Where we've got a blue dot with a number in it, or a coloured dot with a number, if I click on that, it will just zoom in and there'll be more sites within that portfolio. Just to have a look at some live sites, I'm based in Melbourne, so these are actually some council sites for Hobsons Bay City Council in Melbourne. They currently have about 50 assets within their virtual energy network portfolio, where they are in real time, and I'll show you now some of the things that they're doing in sharing their energy around, as well as having the ability to share any excess dispatchable stored energy that they might have access to. So there are three things we need for the virtual energy network to function. The first thing we need is we need to have visibility in real time of what's happening with the energy profile at a particular site. And I'm just randomly opening one of these up in one of the user interfaces that we have access to with our customers. And this is showing us what the energy profile for this site has been since midnight this morning. So the red line here is demonstrating energy that's been supplied to this property through their retail contract. We can see the yellow line picking up here just before 8 o'clock this morning, which is in this case solar energy that's being generated at this site. And the dark blue line is solar energy that's being consumed behind the meter at the site. And where the VEN starts to pick up interest is this green line, which is excess solar energy that's being generated at this facility and being put back out into the market. And just to have a look at a full day, we'll just jump and have a look at how this site performed yesterday. So again, we can see the red line is energy they're buying through their retail contract. The yellow line is solar that was generated yesterday. And we can see that the red line drops right back down to zero for big chunks of the day. So they're consuming their own energy, which is the dark blue line here. But it's this green line that's showing the excess energy that went back out from that site into the market. So at a high level summary, yesterday the site used just shy of 380 kilowatt hours of electricity. Their solar generator produced nearly 243 kilowatt hours of electricity yesterday. So of the 380 kilowatt hours that they, or almost 380 kilowatt hours they used yesterday, they purchased 221.86 kilowatt hours through their retail contract. Their solar generator provided them nearly 158 kilowatt hours of free energy behind the meter, or energy that was provided through their solar generating asset. And yesterday they exported 85.39 kilowatts of excess energy from this site back out into the market. And what we're able to do with that through the virtual energy network is take that excess energy and share that with any other market participant within the virtual energy network system that the generator agrees to share their excess energy with. And rather than that just being, again, dictated through the retail contract on how they share that, the retailer and the generator can agree a rate. So in this instance, this is a council where the council's paying the bill at all of these assets. So they have the option of sending that excess energy to themselves at 0 cents per kilowatt hour. Now, how that works on the bill, our bills are made up of a number of components. The major component, or the main focus component, is the amount of usage, the energy that we've used at the site and that we're charged for on a kilowatt hour or cent per kilowatt hour or dollar per kilowatt hour rate. For this particular group of customers, their bill would typically be made up of about 50 to 55% of the usage component. So the number of kilowatts they've used in peak, off-peak, and maybe shoulder, and whatever the rate is for cents per kilowatt hour for peak and cents per kilowatt hour for off-peak, etc. That's all tallied up. And at the end of the month, that creates the usage component of the bill, which on average for this customer is about 50 to 55% of their total bill. The other 45 to 50% of the bill are all of the market participation charges. So that includes access to and usage of all the poles and wires and transformers and substations. It also includes government charges and regulatory charges and things like the LGC or LRET and SRET components that go back towards subsidising solar systems to be put out in the market. So if this customer sends excess energy to another one of their sites and they send that at 0 cents per kilowatt hour, the site where they're off taking the energy will be saving 50 to 55% of what they would have been paying buying that energy through their retail contract. So as you can see, this is already very disruptive when we start talking about sharing energy at 0 cents per kilowatt hour, but we're not limited to that. The generation site could sell excess energy to their next door neighbour at say 10 or 20% less than what the neighbour's retail contract price might be. And that would enable the generator to arbitrage that excess energy and receive a financial credit on their bill, whilst the off-taker is getting the appropriate apportionment of a debit on their bill for the energy that's come through the virtual energy network through that peer-to-peer trading. We also are able to share from one site to multi-sites, and the generation site could also be an off-taker from other sites. And we can prioritise who we wish to share energy with in tiers of priority. And we can have different pricing, if we wish, for every single trade that might come out from one asset. And I'll show you in a moment a site that's trading with 43 other sites. And they have different pricing for a number of those customers, whilst also having a 0 cent per kilowatt hour price to share energy with themselves. So the first thing we need is that visibility, and I've demonstrated one way in which we've got that visibility of what's happening at the assets. The second thing we need for a virtual energy network to function is we need a retail license. Now, we were originally going to get our own retail license and become a retailer to present the VEN around Australia. And we used to say, unfortunately, the first customer that expressed interest in this with us is a very large commercial industrial manufacturing business in Australia with 200 sites around Australia, and they spend about $400 million a year on electricity. So for ReThink Sustainability to be their retailer, we would have to guarantee to the Australian energy market operator that when the wholesale market price creeps up above their retail contract price, we can't go back to the customer and say, oh, the market's gone up, can you pay a bit more, please? Because they've locked in at a rate for a period of time. And you don't get to go and pass that risk back to the customer as an electricity retailer. Hence, in the last 18 months, we've seen lots of fluctuations in the market with coal-fired power stations, even 2 weeks ago, going down here in Victoria with Yallourn A power station going or being decommissioned for a short period. And we saw the fire up in Queensland in one of the coal-fired power stations and the catastrophic effect that has on the wholesale market rates. Hence, a lot of small retailers have been bumped out of business where that wholesale price has jumped up. And here in Victoria 2 weeks ago, the wholesale market rate went up to about $16,500 per megawatt hour, when it would normally be somewhere between $30 and $90 per megawatt hour. So you could imagine if you had a high intensive energy user that you were supplying energy to, where you're buying it as a retailer from the wholesale market and passing it through, the retailer gets walloped pretty severely in those circumstances. So because we didn't go ahead, fortunately, with our own retail license, we've actually partnered up with a number of retailers in the Australian marketplace who are allowing us to run the virtual energy network with our customers under their retail license. And I'll come back and demonstrate some of those in a moment too. The third thing that we need for the virtual energy network to function is I didn't really want to be sending out an invoice for all of the trades, that the peer-to-peer trades that all of the virtual energy network participants around the country wanted to be doing with each other. And of course, all at different rates. We might give some energy to our parents or our grandparents. We might sell some to our next door neighbour, and we might give some to the local hospital as just hypothetical examples. So one of the key things that we've been able to do is align with a software provider to enable all of that accounting of all of the energy that's being moved around to be incorporated into a virtual energy network compliant retailer's billing platform. And what that means is when this particular customer gets a bill, they have a single additional line item on their bill, which is the virtual energy network line item, and it will be the balance of all of the virtual energy network peer-to-peer trades that have happened in that billing period for that customer. And if they've been a net exporter and they've had different prices on those exports, they will end up with a credit for each of those kilowatt hour trades that have gone through over that billing period. And if they've been an off-taker, they would get a debit, a corresponding debit for any energy that they've bought at whatever rate it is they've agreed with the generators that they've been an off-taker to. So from the retailer's perspective, all of those amounts balance up. So all of the kilowatts are accounted for and match up. And of course, any of the financial arbitrage amounts that are applied for the buying and selling of that energy also all match up or net. So I'll demonstrate for you now how the system works for some of the billing integration. And I might jump down and we might have a look at a larger commercial client in Queensland. And we'll look at the Port of Brisbane for this. So the Port of Brisbane also have about 50 sites currently working in their virtual energy network. And within their portfolio, they've got 5 properties with solar generation. The largest one is the Brisbane International Cruise Terminal, where they have a 790 kilowatt solar generator. If we go in and have a look at their site for the last 30 days, we can see here that the gold part of their graph is the energy the site has been consuming each day for the last 30 days. The yellow part of the graph is energy that the site's consumed. The green part of the graph is excess energy that's been exported away from that site. Now, that typically would go out to the retailer for a marginal feed-in tariff. In this case, because this is a large market participant, there's a 0 cent feed-in tariff. So everything they send back out to the grid, they get no financial benefit for if it goes to the retailer. So we can break down their energy profile into energy that's come from or gone out to the retailer versus energy that's come from or gone out to the virtual energy network. So we can see here that we're able to send their excess energy out to themselves or to other sites that they're responsible for paying the bill at, or they could be selling excess energy to their tenants, or they might be able to provide an arrangement where they can send excess energy to their employees. Because we've only got 50 sites in the Port of Brisbane Virtual Energy Network, they're sending most of their excess energy to themselves at 0 cents per kilowatt hour, but they have got some tenants where they're sharing their excess energy. And I'll just quickly run through and show you some of the functionality around how this all works. So as I said earlier, anyone within the virtual energy network can set their own rules with who they wish to trade with. And while that's loading up, we might just have a look at a site that's in here as an off-taker only. So the main Port of Brisbane office doesn't have any generation capability. They're here purely to take excess energy through the virtual energy network. So again, we can see the energy for the last 30 days that's come through the retail contract versus energy that's come through the virtual energy network. And if I just go and randomly open one of these days up to have a look at a 24-hour period for them, again, we can see energy that's come through their retail contract. So that was 2.3 megawatt hours for the day. And they had about a third of their energy, or 1.2 megawatt hours, come through at 0 cents per kilowatt hour. So when we roll that out across their 50 sites, we can start to see that financially this is very, very interesting to the market. But there's a whole range of other benefits that might come with carbon reduction and other things that become very, very interesting to explore. Just coming back to how we set the rules up, we can see here that this particular site is actually trading with 43 other properties, and there's an individual priority and an individual ability to set individual prices for each of those trades. So most of these are set at 0 cents per kilowatt hour because they're sending excess energy to themselves. If I scroll down, we'll start to see there's some other priorities that come in. So priority 2, and here's one for priority 7, where they're actually sending the energy to, I believe in this case, one of their tenants at 5.72 cents per kilowatt hour on the kilowatt hour usage rate component. And that's actually a 10% discount on what the retail contract rate is for those market participants. So the tenant in this case is happy because they're getting energy a little bit cheaper than what they would be through their normal retail contract supplier. And of course, the Port of Brisbane's able to monetize some of their excess energy, and in this case, at a rate that's a lot more attractive than what a 0-cent feed-in tariff is. So again, all of these numbers change when we start looking at different scale properties. The other thing that's of interest and really important is when we have a look at the, as I said, the bill, there's a single line item on the bill that aggregates all of the individual trades that have occurred over a certain time period. I'm just going to go in and again randomly open up a historical day to show you where all of the aggregated data is that you have access to through our virtual energy network user interfaces. So this is showing, again, from midnight to midnight, all of the energy that's being consumed at this site. And I don't know what date I picked, the 6th of February. And we can see that their off-peak energy rate is 4.496 cents. We'll scroll down until when the sun comes up, and we'll start to see that their peak rate is 6.356 cents. And they're starting to generate excess energy between 8 o'clock in the morning and 8:30. And we'll start to see these peer-to-peer transactions occurring. And in this case, in this half-hour bracket, they sent 166 watt hours to another one of their sites at 0 cents per kilowatt hour. So we can scroll down through all of these and we'll start to see 9 o'clock, there was enough energy that they were sending excess energy to 1, 2, 3 different sites, and so on and so forth as we scroll down throughout the day. And eventually we'll find some in here that are going through at that 5.72 cents. So all of the accountable or auditable data is all kept here for every customer, every user in the virtual energy network using this software that enables accurate traceability of all of the different trades to all of the different market participants that this particular customer has decided to share their energy with. I'll just very quickly show you my own home. So this is my house in Melbourne. Again, same interface for me in my home where I'm looking at the last 30 days. I'm fortunate to co-own a 30 kilowatt solar generator on the roof of a friend's father's factory. So when I look at my own home, I can see energy that's come through my retail contract versus energy that I've had come through. And again, because I own the solar system, I'm sending it to myself at 0 cents. I don't need to buy it. But we can see there's quite a large amount, a large portion of the energy that I'm having come from a completely independent roof to my home at 0 cents per kilowatt hour. Another benefit of the virtual energy network is that when there's excess energy, and if I didn't have such a large generator that I had access to that can provide myself and my business partner most of the energy we need in our own home, we can see these community trades pop up. And that's where there's excess energy in the total VEN community that can be effectively bid for by setting a price that you're prepared to pay to get excess energy. And if there's excess energy in that total pool and the seller has got a rate that is below what your purchase rate or your purchase level that you've set is, you can actually have that excess energy come through to you at that agreed price or whatever the matched price is in between that the market releases that at. And so I can probably demonstrate that just by showing you my trade rules for my home. So we can see that I've got community trades. I'll go to the bottom first. So my cent per kilowatt hour rate for buying energy through my retail contract is 11.445 cents. This is the kilowatt hour rate component only. My actual energy rate's probably about 20 cents. So that's just the kilowatt hour usage component broken out independently. So I've decided that through the community trades, I'm prepared to buy energy up to 11 cents. And when that energy is provided, if someone's got excess energy in the market at 7 cents, I might get some of it at 7 cents. If someone else has got some excess energy they're selling at 9.5 cents, I'll pick it up. But if someone's got energy they're trying to sell at 11.1 cents, my home won't be a recipient because I've set my upper level at 11 cents. So if we're selling, you can also set a selling rate if you've got excess energy that can go out into that VEN community, and it will be automatically matched to anybody that's got a buy price that is above what your sell rate is. And that's all automated. You don't have to get in here and do everything every day. And here's, again, I'm not a generator at my home. I'm an off-taker only. And we can see that I'm sending energy through from the generation site at 0 cents per kilowatt hour to my home. And again, the trade history is what I wanted to jump into. And I'll just go back and pick a date last week. It doesn't really matter what day it was. Again, we can see that my fixed rate is 11.445 cents. And it's all coming through the retailer until the sun comes up, and I'm seeing these peer-to-peer trade buys coming in at 0 cents per kilowatt hour. And on my energy bill, all of these are net up, and I obviously pay for everything I'm getting through my retail contract. If I had agreed a price from any of this energy that's coming through the peer-to-peer or community trades, that would be nominated here. And at the end of the month, that's all aggregated into my bill, but I can come in here and have a look at each individual day and see exactly what happened and how much energy I was using each half hour to see exactly what's going on. For people that have batteries out in their fleet or their portfolio, or standby diesel generators or other dispatchable energy that could be traded in the wholesale market, we do have the ability with the virtual energy network to link in and actually trade those assets. And again, I'll just demonstrate very quickly what the potential of this is. So I'm just going in now to the back of house of some of the capacity we have in the VEN for people that have upgraded to have this hardware capability. They have an NVRO box called Pulse. There are a number of things we can do in here that include wholesale spot price trading for people that might qualify or be interested in doing that. And this does mean we can aggregate communities that might have storage or generation, dispatchable generation capability to participate in some of these other volume-based markets where they can be very attractive, as I was referring to, $16,500 a megawatt hour. I think if that happened in the market, most people would be pretty happy to discharge their battery at home and monetize their excess energy rather than even be self-consuming it at those types of rates. There are other things that we can do here too to actually get benefits for the virtual energy network, or any of our or some of our virtual energy network participants. We have the ability to actually control the inverters. So we actually have the ability to have dynamic export control of the inverters. Now, why is that of interest? If we're in a network service providers area where there might typically be limitations on export, for example, we're able to, with our customers' consent, give that network service provider or the pole and wire owner and operator visibility of what's happening within their networks. They might be a little bit more confident to enhance the export limits if they can see that all of the excess energy that's being generated at one site is being consumed by the other virtual energy network participants within that marketplace. They might be even more interested if they understand that they could be provided, again, if the customer agrees, to have dynamic control of their generation or dispatchable stored energy capabilities to help stabilize the network in that particular environment. And that might mean, and we do have some customers where we're doing this, where there might be some avoided costs that could be made available to market participants if they playing ball with the network service providers. So this is where Aidan was saying earlier, we're getting a little bit out into areas that are not just automatically built into the virtual energy network today, but are provided on a case-by-case basis. And that would mean that if we were sending excess energy from the site we were looking at before to another site in the same local or low voltage network, and the network service provider has visibility of what's happening there and perhaps control for when there are these frequency rise or voltage rise issues in their local networks, they might actually be able to wind the export or reduce the export limit under those events. And what might they give back if we're going to give them that ability to protect their network? Well, they might say, okay, well, if you're showing or you can deem that energy that was generated at this site was used at this site next door or just down the street, we might be able to have avoided costs with respect to the transmission infrastructure charges. And where we're doing this with some customers in South Australia, South Australian Power Networks, in their billing structure, the transmission infrastructure costs or charges, or the TUOS charges, can make up to 40% of the market participation charge cost stack. And if they were able to be avoided, that would be another 20% saving on the bill to the off-taker through the virtual energy network. So there's a whole range of different things in this rapidly evolving marketplace. And we're just very fortunate to be out at the front end of it with the virtual energy network, and now very, very grateful to be at the point where we can work with people like Aidan and community groups like yours to look at helping people get hyper-utilisation of their energy positions within the market, and to develop true community programs where council can cooperate with their constituents and community members can cooperate with each other to get shared benefit and arbitrage financial benefit, as well as all the carbon benefits that ultimately come with sharing renewable energy around in these markets. Gay, is there anything I haven't touched on? I've probably gone a little bit over, I'm sorry, on time, but I just wanted to make sure I hope I've done that justice for you.
That was excellent, Justin. It's a very impressive piece of software. So Aidan, would you like to take from there and answer those specific questions that we put forward?
Justin and I are both available now to answer questions. Obviously, we see this being an opportunity for the Wingecarribee LGA. We've also talked to the directors at WinZero about the potential for sharing within different community groups and extending it beyond the LGAs. So we don't want to limit ourselves necessarily, but we have to start somewhere. And what we're proposing is a 12-month pilot or trial to bring in, let's say, a couple of dozen trial participants, so we can actually get some data and develop out what the benefits are in the real world to people of using this solution. So with that, Gay, I think we're just going to take questions now.
Okay, so has anyone got questions? If you could raise your hand. Yes, Eric.
Yes, my question is, what do the poles and wires people think about all this?
Look, they're generally quite happy. One of the big concerns for the network service providers is they don't typically have visibility of what's happening with excess energy coming into their asset portfolios. So we're very happy, if our customers agree, to provide them access to at least have visibility of what's actually happening within their networks, within which we're operating. And we've had beneficial outcomes through those types of interactions with the network service providers, to the extent that site I was showing you at Port of Brisbane, the Brisbane International Cruise Terminal, they were originally export limited by Energex or Energy Queensland to 100 kilowatts per hour of export. That solar system was energised just prior to COVID, and as we all know, there weren't too many cruise ships coming into Brisbane during COVID. So that was a large waste, really, having an 800 or 790 kilowatt solar generator there, only being able to export 100 kilowatts per hour. When we went back to the network service provider or the poles and wire operators, we were able to demonstrate what we could be doing with that excess energy to all of those other 50 sites or other 49 sites within the Port of Brisbane's virtual energy network. And they opened the export limit up to 590 kilowatts per hour, which is a very big step change in what that restriction had been. So the networks, there's only upside for the networks, really, where they can have visibility and potentially control through the system.
Just to follow up, does that mean you'd have to have new hardware on your meter board at home?
Only if you want to get involved in the dynamic control. If you just want to participate in the virtual energy network, like my home I showed you, there's no hardware requirement. Where we do have a requirement for hardware is if you would like to do switching or controlling of different assets, like dispatching batteries to participate in some of those wholesale or spot price markets and things, that's when we do have the option for people to upgrade their virtual energy network outcomes to include that control aspect. But that is not required just to participate as a generator or an off-taker within the virtual energy network itself.
But with the poles and wire people, if they want visibility, how do they get that through the umbrella of the virtual network, or is it at household level?
It's actually both. So they can actually have visibility down to individual site level, because we obviously have access to that. So it's not difficult to make that available to a third party if our customer agreed that they're comfortable to do that.
Winner?
Thank you. Hi, Justin and Aidan. Thank you for that. That was really, really great. My question's about the example you showed us with the council buildings. I'm curious, what percentage of those buildings actually had solar versus did not have solar? So receiver and a generator.
In the case of the Hobsons Bay example I showed you, I think they almost all have solar. They're about to bring in about another 270 sites that don't have solar. So they started bringing in their solar fleet first, with a view to bring their other assets in now that they've got a bit of an understanding and can see how everything is operating. So that would mean that they will end up with 50 out of 300, probably about 20% of their portfolio will be generators by the time they're all set up. By number, by energy consumption, that changes a little bit too when you have a look at what the most of the solar's on their larger generating or larger usage sites. But you can start to understand.
Looking at like RFS sheds and community halls, things that aren't used too frequently.
Yeah, so we start to be able to change our view of how we deploy renewable energy with the virtual energy network. And in a council context, you can imagine a large sports hall that certainly in Melbourne is not environmentally conditioned for air conditioning. So it might have lighting. If the lighting's running in a large basketball stadium, for example, you might only have 6 or 7 basketball courts in that big shed. You might only need 20 kilowatts to run the lights, but you could possibly fit 900 kilowatts of energy generation capacity on the roof. Historically, people wouldn't never have done that because there's no need. With the virtual energy network now, people are oversizing systems to take advantage of that energy sharing capability.
Yeah. Are there any batteries involved in that network?
Yes.
Okay, so those lights at night would be powered by those batteries?
They could be, yes.
Yeah, yep. Okay, cool. Interesting, thank you.
Miles?
Thanks, Justin and Aidan, and it's good to see these things happening. I can see lots of virtues for businesses that use lots of energy, don't have storage or don't have solar on their roof. My question is in relation to returns. There's a number of us on this call that use Amber. Yesterday I made $71 through discharging battery, and if I were to change, as I've spoken to Aidan about, it'd have to be financially beneficial. And I'm not being capitalistic in this regard, it's just a matter of getting a return on investments made in solar and battery. So how does it stack up for the people generating the electricity and perhaps those that are storing the electricity? I noticed you mentioned a lot of the charges were 0 cents. How do the people that generate the electricity get their return?
Yeah, the 0 cents was really based on people sharing energy to themselves with multi-site assets. Most of our VEN participants are sharing energy at a price. So that's entirely up to the participants how they set that price. It's not up to us and it's not up to the retailer. That's entirely up to you. So if you wanted to send energy to your next door neighbour or family members or to other people within the community on the call today, it's entirely up to you at what rate you choose to set that price. And if someone agrees to buy it at that price, there's usually a pretty exciting arbitrage for both the generator and the off-taker based on what the generator's feed-in tariff would typically be versus what the virtual energy network peer-to-peer price could be set at. And similarly, from the off-taker's perspective, there's usually a fair bit of room to move between what that VEN price might be and what their normal retail contract price might be. So we really are in the, trying to create the opportunities for people to get those win-wins. And that can be very different if you're trading energy with someone in the local community, or if you're trading energy with someone in Townsville, or if you're sending energy to someone in Adelaide, for example. So there's all sorts of different arbitrage opportunities that become able to be looked at and played with. With respect to your battery trading, I'm not super familiar with how the AMBER process works, but the VPP functionality that we offer through some of the retailers that we're working with, certainly at most of our business is in the commercial and industrial side, and we're well in front compared to other market providers in the context of that scale. The mass market, or the market we're talking about for residential homes, etc., would have to have a bit more of a detailed look. If you're making $70 a day from trading your battery at home, I imagine your battery's 15 odd kilowatts, 12, 15 kilowatts, kilowatt hour battery.
Powerwall, 13.5, yeah.
That's pretty good arbitrage. That's going to be hard to beat.
Yeah, look, in relation to that, it's not always like that. And if you're with a standard retailer and you're getting a feed-in tariff of anywhere between 2 and 10 cents, as they are in the market, it's not hard to set a rate that you'd expect to get back from sharing your energy. But when you're in a wholesale situation, the market varies, and it makes it challenging to set a rate. Like at the moment, our average for the month is 10 cents.
Yeah.
But sometimes it's 2 cents.
Yeah.
Anyway, but in AMBER situations, it's a different kettle of fish, but I can see a lot of benefit for people having surpluses and on a standard feed-in tariff to be able to share their energy either locally or, as you said, in Townsville. It's a great idea.
And even beyond the battery, once the battery has been charged up, then what are you doing with your excess? So the VEN certainly has a spot to play in that side of the conversation too, where there's excess being generated when nobody's at home. Your employer might be able to be taking it, for example, and when your employer is not using their energy on weekends, you might be able to be taking it back from them if they've got a solar generator at their facility. So there's all sorts of interesting things that start to come into play.
Yeah, hi, Justin. Just a couple of questions. First off, I think Eric asked a question about hardware, and you said there's no need for extra hardware. Does that include that you don't need a smart meter as well?
No, sorry, Karen, you're quite correct. You do actually need a smart meter. So you can't participate in any of these market-facing programs without a smart meter. So, yeah, should have made that clear. I'm sorry.
Okay.
But yes,
no, that's okay. And the second question was just around the retailer. So everybody that's in the virtual energy network, do they have to be on the same retailer or on just a retailer that's participating? How does that work?
Currently, we need to be on the same retailer. So we've got some different options for that at the moment based on what part of the market participant is normally in and what the different benefits look like to them. So yeah, we do currently need to have the same retailer at the generation and offtake end. We are working, and this is not something that will happen quickly. This is probably a 18 month to 2 year program. But we are working to have obviously more than 3 retailers in the system within that time frame, and working with the same financial institution that currently settle all of the wholesale or generator and retailer wholesale trades. Using that same financial institution, there's no reason that we can't in the future have a mechanism for virtual energy network trades to be traded on the same platform across retailers. But currently today, VEN community does rely on a common retailer for that community at the generator and off-taker end.
Andy?
Hi, and thank you for a very informative presentation. So I just want to understand the pricing a little better. So you were saying that 55% of the price is actual usage and 45% is government charges. Did I understand that correctly?
That was for that particular customer. So everyone's different. If you're a Port of Brisbane, your usage component might be closer to 30%, and the market participation charges could be 70% if you're a large commercial player. Most residential homes, it's approximately 50-50. It'd be about 50% usage, 50% market participation.
Right. And that is incorporated into, on my bill, I've got usage charges and daily supply charges. So
yes.
That's 50-50. That's in the usage portion of the...
In a residential home, you have what we call a bundled bill. So all of those market participation charges are actually bundled in with your usage charges. Sorry, your kilowatt hour usage charges. So what you've been charged for peak and off peak. If you look at if you've got a business or somebody, or maybe at work where there's a bill that's for a larger customer, you'll see all of those market participation charges broken down, and there's in some cases 15 or 16 of them. And then you'll see the kilowatt hour rate charges for peak and off peak and potentially shoulder separated out. In our smaller mass market bills, they bundle them. You don't get to see them. But typically for a residential bill, it's going to be somewhere close to 50-50 usage versus market participation charge expectations.
Okay, so my next question is, you said your actual usage charge for your home was about 20 some cents. How are you getting that? Everyone I know is paying 30 or more.
I haven't actually looked, Aidan. I don't know if you can look up what South Bank is at the moment on the portal. You able to do that while we're talking?
I will, yeah.
Yeah, just we'll tell you exactly what it is today, Andy. If I was to join up today with the Energy Locals platform, which I was showing you for my home, that will show me what the expected cent per kilowatt hour rate would be versus what the component is that they've allocated as the raw energy rate, which was the 11.445 or whatever that number was.
Is there any problem trading between residential customers and commercial customers? Does that create any issues?
At this point in time, we've got different retailers that are doing things a little bit differently. With the Energy Locals supply arrangement, that is what we're probably focused on for a community which is involving a lot of homes. We can have small to medium enterprise businesses included to trade with. So that's for people, typically up to 100 megawatt hours of energy use per year. For commercial and industrial, at this point in time, they would typically tend to cross to another retailer. So we've got different retailers currently that are all doing things a little bit differently. And if we were talking to a group of large commercial business owners today, we'd be talking about Momentum Energy offering this. But talking to predominantly a group of homeowners and potentially small business owners predominantly, we'd be talking about the Energy Locals retail supply arrangement for this circumstance.
Right. And are we limited, if we join this virtual energy network, let's call it Southern Highlands or Wingecarribee Virtual Energy Network, are we limited to trading just with people in that network?
No, you could invite me to trade with you, Andy, if you wanted to. So anybody else that's in the virtual energy network more broadly with that retail arrangement becomes a potential trade point for everyone else. We do tend to have customers that come together with their own groups because that's how we tend to operate as people. We tend to have a group like yours that would like to look after each other first. But if you still had excess energy, the virtual energy network is a number of groups potentially like yours or broader market participants that absolutely can trade with each other.
Okay, one final question. In the software side of things, let's say I join up and then I get to choose who I want to trade with and what price and everything. I mean, do I have to go through a list of 50 people and set a different price for everybody and make that sort of, it looked like it could be potentially a bit overwhelming for people if they felt like they had to.
Yes, you do, but are you going to go and from your home go and trade with 50 people, or are you probably going to be trading with 10 or 20? So it looks complicated, but when you actually have a look at how simple and quick it is to do, it's pretty easy. It's very intuitive, and we're here to help too. And we're always looking at how we can evolve that process to make it simpler, particularly for people that do want to have multi-point communities set up that they wish to participate in. We are working on the ability to have an entire community registered, and if you pick that community trade option, it automatically opens up everybody in that community to trade at a certain rate. But you still have the right to go and trade with someone else at a different rate and prioritise that accordingly if you wish.
Okay, great. Thank you very much. Energy Locals.
Has that got the rate there, Aidan? Sorry. So
25.5 cents.
Sorry, 25. So yeah, so my electricity, my rate was showing up as 11.445, but the total rate was 25.5 cents per kilowatt hour. So it's a little bit less than 50% is the deemed kilowatt hour usage rate.
Right.
In my case for my home, but that could be very different that depends on lots of different things on how the retailer breaks that down in different parts of the country.
And what was the name of that plan?
That's Energy Locals members plan, I think. So Aidan will be able to circulate a link for people to explore. Just having a look at what he showed there, we can go without actually signing up to anything, have a look at what the rates would be for where you are. And you can at least investigate that if you wish, just to have a look.
Thanks very much.
Yes, Clive.
We have 7 kilowatts on the roof, and but we still seem to have very high electricity bills. I think the last quarter was $600. So we're looking at increasing the roof solar to well above the amount you're allowed to feed into the network, and also getting a battery, probably a Tesla wall battery. And just so I think there is probably an advantage to the people within the VEN to have batteries. It gives them greater capacity to draw. Is there a battery advice service for the best battery? And is there a bulk buy scheme for batteries?
Not yet, but there can be. And probably my only comment in relation to the choice of battery at the moment is our integration capabilities are limited with Tesla. Tesla want to do all their own thing and don't really like to allow access or control for third parties at this point in time. So that would be my only comment on the choice of battery as far as the VEN is concerned in its current iteration. Tesla are not very willing to allow third parties to come in and have control of their assets. They're trying to do their own virtual power plant type capability, which is great, but that does exclude other third parties from coming and operating their systems. But any other battery is pretty much okay.
All right. The other thing is I noticed on the previous slide showing the charge rates and things that there was a membership cost of $20 a month. Is that what the VEN charges?
No, it's not. The VEN charges are actually only for mass market or up to 20 megawatt hours a year, never more than $5 a month. So that's the maximum VEN fee that would ever come out. Energy Locals are a little bit different in how they go to market as a retailer. They're actually passing through the wholesale energy rate effectively, and they charge a $20 a month fee for people to access the wholesale rate. So they're not actually putting a margined rate or a rate in that has the de-risking of the market movement price. They're not doing that the same way as a normal retailer would. And if you have a look at what the annual expectations are using the Energy Locals platform, it's typically substantially better deal when we have people have a look at it. The market moves, of course, but in most mass market residential billing, rates are usually set for a period of time, but Energy Locals are doing a little bit different to a conventional retail contract. So they're putting in their unhedged price. The hedging is the word I was trying to think of, excuse me. So they're putting in the raw buy rate in the wholesale market averaged across a period of time rather than a hedged rate. And they charge $20 for the privilege to do that. And as a consumer, you usually end up a fair way in front.
Okay, no, thank you very much.
And that's without the VEN overlaid on top of that.
This excess limit that Endeavour puts on this here, does this get around that? And do you need three-phase power at all for any of this?
Definitely don't need three-phase power for the VEN. You can join up on any connection type. Export limitations are really interesting, and it's very complicated, and there's lots of different reasons why they exist and whether or not they need to. The virtual energy network, as I described with Port of Brisbane and with others, has enabled export limits to be lifted once we have demonstrated to the network service provider what we're doing. That is always on an individual case-by-case discussion with the network service provider. That's not just an open right, if you like. Being in the VEN means we're not going to be limited. The export limits may be based on the transformer, literally, that's on the street that your home is connected to or your business is connected to. It could be as simple as that. And until that transformer is upgraded, you're going to be limited. Or it could be that the local substation is at capacity and they're very concerned about pumping too much more into that local network. There's literally hundreds of different reasons why those limits might be in place, and they could be very different on a case-by-case basis.
Thank you. Yes, Jeff. Thank you.
Justin, thanks for your presentation. Terrific. Lots of information there. And I think in answering Clive's question and Gay's question, then you've probably answered the one I was going to ask. But just to clarify, is there a preference then for a particular retailer operator? And is there still a limit on what can be exported into the grid by a residential exporter?
The residential export question is really, again, based on, I can't answer that based on your actual area, but if you know what those limits may be, they're probably not going to change. They will probably still be maintained. If there are enough people in a certain network or area that got together, you could go, and I'd be more than happy with Aidan to come and actually have a chat with your network service provider and see what flexibility there is to offer them visibility of what we're doing through the virtual energy network in that particular part of their system, and to, if necessary, offer for them to have control if that's of value to them, if that was going to move the needle on what their limitation policy is. The first part of your question with respect to the different retailers, yeah, there are 3 retailers at the moment that we're working with in the Australian market, with more coming, but with the current ones for a group of residential homes and small to medium enterprise market participants, Energy Locals would be the one we would be recommending.
Thank you. Mark might have a question.
Justin, thanks for an excellent presentation and very interesting details. I'm in the odd position of being off-grid and have been off-grid practically all my adult life. So I'm just purely curious about the question which was raised before. Can you give me some idea of the ROI asset returns that people are currently getting from their solar, diesel, or battery storage systems?
Very varied, Mark, but there's lots of answers to that too. So, and what the VEN does to enhance that too in hyper-utilising the use of some of those assets. So again, we work primarily in the large commercial and industrial space in bringing this to market. We're very excited and interested, obviously, in the mass market as well, but a lot of the modelling we do on that question is based on large commercial assets. So we ran a program to look at a large white goods manufacturer here in Australia, for example, and we ran an analysis for them. They already, across 8 sites around Australia, they already have 3 megawatts of solar and a 1 megawatt hour battery, and they were looking at what else they should add to their portfolio. Yes. They were going to add another 300 kilowatts of solar. It was going to cost them $363,000. And we said, before you do that, let's just have a look at what would happen with the VEN if we filled the roof up at some of your assets. And that meant they could actually take in another 11 megawatts of solar. And that would have cost them $12.7 million. So in that case, they became the bookends of the discussion. And what we went through when we look at the different arbitrage opportunities that the virtual energy network adds to the excess energy profile on both that load matched scenario versus filling the roof up, we had a position where the additional 300 kilowatts was going to have a payback of around 6.5 years or a little bit more. The $12.7 million investment was going to be 27 years return on investment based on the behind the meter use only. However, when we look at the financial arbitrage for the energy sharing, and looking at sending that out to their employees, for example, at say 15 cents per kilowatt hour, which they could be able to do in South Australia quite comfortably. Those return on investments came back to something like 1.2 years for the $363,000 investment, and about 5 years, in fact, 4.2 years if they were sending that excess energy on the $12.7 million investment out at 15 cents to employees. Now, of course, they're not going to do that. They're going to use a lot of it themselves, and they're paying a lot less than what their employees are. But that $12.7 million investment came back to about 5 years. So all of a sudden, that particular customer is not looking at $363,000 to spend. They've gone to $3 to $4 million because of the virtual energy network and arbitrage opportunities on reducing the return on investment for them. But we took that a step further and had a look at their net zero strategies. And when we overlaid their net zero strategies, and most of these companies have already done all of their energy efficiency upgrading work, they've changed all their lights and they've done all the low-hanging or obvious things. So there's not a lot more to do and in their case, they've got their own self-imposed carbon reduction expectations to be reducing their carbon footprint by 80% by 2025. The only way they're going to do that is to buy certificates, because they can't physically change a lot more. But the virtual energy network showed in their case, where their energy use across their 8 sites made up 78.8% of their total carbon emissions for their Australian operations, by filling the roof up or spending the $27 million across their portfolio, that would generate nearly 3 times the ACCUs in the form of LGCs that they would need to offset their carbon footprint. So all of a sudden, at that point in the discussion, they're looking at $5 to $6 million investment in renewable energy infrastructure, not because of the operational cost savings, not because of the arbitrage opportunities the virtual energy network provides, but because this is going to help them reach their 80% carbon reduction by 2025. And better than that, it's going to be a cash flow positive opportunity for them rather than an operational cost for their business. We asked them one more cheeky question: who's important to you in your supply chain? If you're selling refrigerators, dishwashers, and washing machines, or manufacturing them, Harvey Norman are probably selling a big chunk of them for you. So if you start then to look at filling the roof up again and sending excess energy to Harvey Norman, say 20% cheaper than what they would be paying for their retail contract, and you can sell it as green energy by applying a 3 cent arbitrage for the LGC to be attached, all of a sudden you're affecting your Scope 3 emissions as the manufacturer fairly substantially, and you're heading towards 100% carbon zero.
Yes, wonderful picture. Thank you very, very much.
Andy.
Yep. I just had one other question. Going back to the whole 50-50 usage charge and government charges, do you still have to pay the government charges on peer-to-peer trades?
They're not government charges only, Andy. They're market participation charges. Some of those are government charges. Yes, we do typically, with the opportunity in some circumstances to explore if you've sent energy out into the market and it's been consumed by someone else in the same low voltage or medium voltage network, and the energy hasn't been transformed up to go out into the transmission infrastructure. There is an avoided cost opportunity to discuss with the network service provider on the transmission infrastructure cost charges, or those TUOS charges I was referring to earlier. That's not just a given. It's not set up today that anyone in the VEN gets advantage of that, but we have the opportunity to go and discuss that with each network service provider, with a community of virtual energy network participants, to say, look, Andy is sending energy to Gay and to Robin and to Roland and to Neil, and it's all happening within this low voltage network. It's a little bit like going and buying a 4-cylinder Mitsubishi and being charged for a V12 engine in it. The ACCC will not allow someone to pay for something they haven't used or haven't had access to. So there is an avoided cost discussion to go and have politely with a network service provider to look at where those avoided costs can be applied. But rather than go and pick a fight with them, we prefer to say, here's what we can give you. We can give you visibility. where appropriate, we can give you control of those assets to help manage your network more sustainably. What would you be able to give back to our market participants if we give you that? And that might be some avoided costs.
Okay, so just so I understand, when you're selling power to yourself from the solar system that you own to your home,
yep,
showing up as 0 cents on the software side that we were looking at,
yep.
but on your actual energy bill that you're paying, that's going to come through as something like 11 cents.
Correct. Yes. Yep. But I'm avoiding the kilowatt hour usage component. I'm getting that at 0 cents. That's correct.
Okay. So I think in your rules, you had said you would pay up to 11 cents.
That's on the cent per kilowatt hour component, on the usage component of the 25 cents. So that's on the 11.445 or whatever that number was. That's right.
11.445 was what the retailer was charging, but I think you had set rules where you would pay up to 11 cents.
Correct.
To others in the peer-to-peer network. But
correct.
That's going to show up on your bill as about 22 cents.
Correct.
Okay.
Yeah.
Yes, Barry.
No problem.
Look, thank you. Just a quick question. In our situation, for a big number of our sites, we do have a long-term contract, so to speak, with a PPA, with a provider. How open do other retailers tend to be with this type of discussion? Is it worth us starting discussions with this retailer at this point in time, or how do we broach that subject?
Yeah, so probably is an offline discussion, but at a very high level, the answer is we are very interested to have as many retailers participating with this VEN capability as possible. The way we are strategizing to do that is to take some very valuable corporate or commercial or industrial customers, groups like Vicinity Shopping Centres or like ISPT or Australian Unity, with large property funds where they're paying hundreds of millions of dollars a year for electricity. If we go and get 2 or 3 of them together and sit down with the retailer and say, you know, these customers will renew their contracts for another 24 or 36 months if you enable this virtual energy network capability function. If you don't, they're going to go to the retailer down the road when their contracts expire to go and play with them. So our strategy is to really use high value customers in the market that are interested in the VEN, and that may include councils as well, but certainly, you know, some of these customers, like the very first one I was mentioning, spending $400 million a year, they have a little bit of weight when they sit down with the retailer, a lot more than Justin and Aidan would have, for example, going in and sitting down and talking to them about what we're doing. So there is interest, and it's always important from our perspective to look for the win-win for everybody. Retailers immediately go to the fear of loss. So when I showed you the Port of Brisbane before, and we had a look at the main Port of Brisbane office with all of that energy in the middle of the day that the retailer's not providing or making a clip on, they don't like to see that. But when they understand that the Port of Brisbane's actually got another 50 sites themselves, and they've got another 180 tenants within the port, and there's about 6,000 employees that could all come together in a virtual energy network context, that all of a sudden becomes a little bit attractive to the retailer. So it's a matter of having the discussion in a way that's a win-win for everybody involved. And the virtual energy network enables the ability to have a fairer outcome for everybody.
Thank you. Yes, Miles.
I was just going, you've already talked about stationary storage and the opportunities there other than other sources of generation capacity. But the next big revolution just around the corner is already happening in other parts of the world is mobile storage. That's EVs and vehicle to grid, vehicle to home, vehicle to load, vehicle to grid. I'd be interested to hear your thoughts on how that's going to impact on what you're doing and how it can be managed and what the hurdles are to get over to make that happen sooner than what we're currently experiencing.
Yeah, really good question. And yes, a lot of thought and work is going into this space generally in the market and also with us. We work with JetCharge, who are probably Australia's largest provider of EV charging stations and capability. And we do have a view that EVs, where they can be bilateral in their energy movement, can absolutely become participants in a virtual energy network. So they already can, to the extent where if you've got solar on your roof at home and you went and plugged your car in at a particular shopping centre, there's no reason why that car, when it's plugged in, or that vehicle, when it's plugged in, has an identifier that recognises or is recognisable, that the energy that's coming into that car could actually be deemed to be coming off the roof of your home. So all of those things are actually happening and being developed. We're not just working with the perspective from residential homes and cars, we're also looking at this for fleets with groups like Saab, Volvo, and transport and logistic companies like Port of Brisbane that are looking at investing in energy charging hub infrastructure. And all of these things, the VEN becomes a really interesting element in all of those discussions and what that could look like in the future.
Very interesting. Yes, Jane?
This is possibly not the right place and everything for the question, but I've got 2 active solar sites, both just outside the Wingecarribee area. One's at Camden and one's well outside in Sydney. But they're both small sites and neither of them at the moment have a battery. A, is there any interest in me joining the Wingecarribee group in a VEN? And B, do I need a battery per site, or just can I use the VEN to share my battery amongst my 2 sites at least?
Yeah, I think one of the main things that I hope I've been able to show today is that the VEN doesn't require a battery. This is not a VPP. We can actually trade real-time live energy in the market. And in in fact, many circumstances, the ability to do that supersedes the need to have a battery from the financial arbitrage position. Now, not all, but in many, you can actually be better off trading your energy in the VEN than what your behind the meter energy use might look like. Again, that's probably more related to larger corporates than it might be to residential homes, but certainly goes hand in hand with a battery solution very nicely. And in some circumstances where you could be putting energy back into the market at a higher rate than what your actual savings are at behind the meter. Again, that's not going to happen frequently in a domestic or residential scenario. But it certainly does in commercial and industrial and large market energy participants. They can be better off using the VEN than actually having the energy stored in a battery to use on site.
Is it Jane?
Thank you, yeah.
So I just want to talk to you about your question about whether you sit outside the LJ and whether you could be part of the group. And we haven't got to that level of detail, the discussions with the directors of WinZero just yet, but one of the bigger picture things here is potentially community groups trading amongst each other or between each other. So maybe those 2 sites could give us some insight into trading outside the LGA. And although the initial preference might be given to generators inside the LGA, there are probably some benefits having a couple of people outside of it as well. So we wouldn't want to exclude you at this point.
Thank you.
Yes, Hugh?
Justin, Adrian, thank you very much for a wonderful presentation. Jane sort of partially asked the question that I was going to ask. We've got a house here in the beautiful Highlands and a place down in the Snowies. And if you were on a VEN with both properties, we could actually set the price to 0 to trade with ourselves, I think, as you said earlier, and could also turn that on and off, if you like, as often as we needed to, as you were back and forth between different places?
100%. And you can just leave it on all the time. And when your primary asset of use, so where you actually are, is using energy, the other site could be sending energy to that site. Once that site doesn't need any more, you don't need to turn it off. You can, but you don't need to. You can just leave it on. And the excess energy would then go to your 2nd or 3rd or 4th priority that you've established if your other residence was your primary priority. So that would mean that even with the standby fridge, for example, at the place in the Snowies, and whatever might be happening during solar generating hours could be being supplemented or provided from the Highlands every day. And that adds up pretty quickly. And when you look at that over a year, and especially when you start looking at when you're using the other facility, but getting some of your energy during the day at 0 cents per kilowatt hour from the Highlands to the Snowies, that gets really interesting what you can do. But you don't need to turn it off. When it doesn't need any more energy in that 5-minute bracket, it just gets allocated wherever else you've got allocated for it to go.
Okay. And is there, Justin, is there a minimum with a VEN for economies of scale? Is there a
minimum number of
residencies
participants would be 2.
Right.
Yeah.
Okay. Thank you.
Okay, thank you very much, Justin. That was brilliant. Aidan, would you like to just give people the next steps of how we take it from here?
So the next step really is expression of interest. So what have we done so far? We've provided a presentation in the forum last Thursday week at Midigal and RSL. We said we would provide a demonstration of software. That's what's happened today, or the solution, I should say. We said we get your questions answered. And I think all those 3 things have been achieved to a reasonable level. There may still be residual questions there for people for us to answer, and that's fine. But what we're now after is expressions of interest. And expressions of interest simply is an email to the mailbox that's going to be circulated, plus also a CC to the directors at WinZero. What we're going to try and do in an initial process is we're going to try and assess interest and also see if we can match some of these generators with off-takers at a very high level, and then obviously embark on this 12-month trial. We'll get back to people, give them some feedback. We're not trying to exclude anyone at this point. In fact, the more the merrier, but obviously we're trying to balance out generation and offtake as well. And there's my details. So our role in this is we're facilitators, coordinators. We're calling this a coordinated LJ-based community trial. And we'll be here for the journey, throughout the journey. And we obviously liaise very closely with ReThink and Justin's team from that side of things, but also be liaising very closely with you guys as well to make sure you're comfortable and understand what we're asking, what the offer is on the table.
Excellent. We were hoping that we were the first community to be doing this. We've found out that we're not, but that doesn't stop us being up there with disruptors, hopefully. So
we're certainly one of the first. Okay.
One of the first. So thank you very much, Justin. That was brilliant. It's just always lovely to see somebody who knows how to show the capability of their software. We will be in touch with everybody very soon, and thank you very much for coming to the webinar today.
Thank you very much. That was really wonderful.
Yeah, thanks for having me, everybody. Appreciate your time.
Yep, thank you.
It was great.
Thanks a lot, everyone.